Global stock markets are deep in the red as the Russian military drives deeper into Ukrainian territory. Asia's biggest benchmarks, those in Japan and Hong Kong, are both down more than 2%. Shares on the Chinese mainland have lost 1%. U.S. stock futures are also set to extend losses from overnight. The latest development to spook investors is Russia taking control of a Ukrainian power plant, which is the biggest in Europe. Authorities in Kiev say a meltdown there would be far worse than the Chernobyl nuclear disaster in the 80s. Though there is some relief for consumers. The Brent crude benchmark has fallen back to around $110 a barrel after trading as high as $119 on Thursday. For more, let's go to Danni Hewson. She's a financial analyst at AJ Bell in Huddersfield in the UK. Danni, welcome back to the program. Can you talk about the impact of Russia taking control of this Ukrainian nuclear power plant? How are investors reacting to this?
Well, investors obviously are incredibly nervous. What we saw overnight were Asian stocks falling down to a 16-month low upon the news that there was a fire at this nuclear plant. They have recovered slightly upon the news that the fire is out. But of course, an incident at a nuclear plant in Ukraine could have drastic consequences, not just for Ukraine, but of course for much of Europe as well. So investors are incredibly nervous about that and the whole conflict as it goes on. What we've had, we've seen the FTSE open down 1%, the CAC 40 in France lost 1.5%, and the German DAX down 1.5% as well. Clearly, investors are no longer panicking as they were early on when we saw that fire break out, but they are incredibly nervous, and I would expect the volatility to continue throughout the day.
Right, Danni, we've seen oil prices ease somewhat, but obviously it's still a major concern. What are investors expecting there on the sanctions front? We saw last night the White House kind of dismissing the idea of immediate sanctions on energy exports, but how is the private sector preparing for this possible scenario?
Well, I mean, President Biden has said that nothing is off the table, but I think that, honestly, most investors assume that there won't need to be any sanctions on energy because, the industry is already self-sanctioning. What we're seeing is a lot of businesses deciding it's simply bad to do business with Russia. Either they don't want to purchase oil or gas from Russia, or they're finding it incredibly difficult because of sanctions that are already in place upon banking, which makes it very difficult, obviously, to pay for those goods. And of course, we've got issues with shipping as well. So while, of course, a lot of people are saying, look, in order to really make an impact on Russia's economy, we need sanctions on energy. At the moment, it feels very much like a death by 1,000 cuts. And of course, if people stop buying Russian oil and gas in the kind of levels that we are seeing at the moment, that could impact production. And of course, if Russia has to shut down production, then it's very difficult then to turn those taps back on.
All right. Danni Hewson, financial analyst at AJ Bell in the UK. Thank you for joining the show.